Most people are misreading XRP right now. While retail traders focus on daily price movements, some of the world's largest financial institutions are quietly exploring tokenized assets, digital settlement systems, and blockchain infrastructure that could reshape how value moves around the globe. The real story isn't what XRP did this week. The real story is why tokenized gold, real estate, securities, and even electricity are increasingly being connected to blockchain networks, and why XRP Ledger keeps appearing in those conversations. Today, we're going to break down the institutional developments, the growing tokenization movement, and what it could mean for the future financial system. The shift from crypto to infrastructure, ladies and gentlemen, because for years, the crypto industry was dominated by one conversation: price. Every headline focused on volatility. Every discussion focused on speculation. Every cycle focused on who was buying and who was selling. But behind the scenes, a different conversation has been developing. Infrastructure. Institutions are becoming less interested in cryptocurrencies as speculative assets and more interested in blockchain as a technological foundation. The focus is shifting from efficiency, settlement, liquidity, ownership, and perhaps most importantly, tokenization. Because tokenization has the potential to transform how assets move throughout the global economy. The 30 trillion gold opportunity. Gold has served as a store of value for thousands of years. Empires accumulated it. Governments held it. Central banks continue to hold it today. Yet despite its importance, gold ownership remains surprisingly inefficient. Storage costs money. Transportation costs money. Verification takes time. Settlement often involves multiple intermediaries. And access can be limited. Now imagine a world where physical gold can be represented digitally. Imagine 1 ounce of gold being divided into millions of smaller units. Imagine ownership transferring instantly. Imagine trading occurring 24 hours a day. That is the promise of tokenized gold. Instead of changing the asset itself, tokenization changes how the asset can be used. And that distinction is important. The objective isn't replacing gold. The objective is making gold more useful. Quick disclaimer, this content is for informational, education, entertainment purposes only, not financial advice. Always do your own research. With that said, let's continue. See, the vision of digital gold. Industry leaders discussing tokenized gold are not focused solely on retail investors. In many cases, the goal is servicing the existing gold market. Institutional holders, wealth managers, asset allocators, and eventually everyday users. Some envision a future where digital gold can function similarly to currency, where value can move globally, where ownership can be transferred instantly, where gold can participate in lending markets. Let that sink in. That's massive. See, where gold can be used as collateral and where physical commodities become programmable financial assets. Whether that vision takes years or decades remains uncertain. But the direction of travel is becoming increasingly clear. History provides an interesting comparison. In the late 19th century, many major economies adopted the gold standard. Gold became the foundation of international settlement. Trade expanded because participants trusted a common framework. Businesses could transact borders with greater confidence. The system created a shared monetary language. Today, some observers believe tokenized gold could potentially create a digital version of that efficiency, not by replacing modern currencies, but by making ownership and transfer of value significantly easier. The technology is new. The objective is familiar. Reduce friction, increase trust, improve economic coordination. See why some believe adoption will happen faster. Because one executive suggested blockchain could become invisible infrastructure by 2040. A world where consumers interact with blockchain daily without even realizing it. But many industry observers believe adoption could arrive much sooner. Why? Because major financial institutions are already building. The DTCC, major stock exchanges, settlement providers, European financial infrastructure firms, banks around the world. Many are actively exploring tokenized initiatives. This is no longer a theoretical discussion. It is becoming an operational discussion. And when large institutions begin investing resources into infrastructure, change can often arrive faster than expected. You're enjoying breakdowns like this, and you're an XRP holder, ICP holder, HBAR holder. Make sure to like and subscribe. It helps the channel a lot. Now, with that being said, let's continue because this next part is where it gets even more important. We'll talk about the XRP ledger's role. This is where XRP ledger enters the conversation. For tokenized assets to function effectively, the underlying network matters. Institutions require systems that are efficient, reliable, and capable of handling significant transaction volume. XRP Ledger offers several features that make it relevant. Fast settlement, low transaction costs, built-in exchange functionality, automated market makers, continuous operation, global accessibility. Unlike many traditional financial systems, blockchain networks do not close at the end of the day. Ladies and gentlemen, that is the most important thing here to pay attention to. They remain available around the clock. And as markets become increasingly global, that capability becomes more valuable. See, tokenization goes beyond gold. Gold may attract headlines, but tokenization extends much further. Silver, rare earth minerals, real estate, money market funds, government securities, energy assets, carbon markets, and many other categories. The broader idea is simple. If ownership can be digitized, markets can become more efficient. Settlement can become faster. Liquidity can improve. New financial products can emerge. The potential opportunity is significantly larger than any single asset class. Tokenized electricity and real-world use cases. See, one of the more surprising developments involves electricity. Most people associate blockchain with financial products. The electricity markets represent enormous economic activity. The ability to digitally represent and exchange energy-related value introduces entirely new possibilities. Suddenly, blockchain becomes less about speculation and more about logistics, coordination, settlement, and infrastructure. This shift from speculative narratives towards practical applications is one of the most important developments happening today. See, institutions rarely move quickly, ladies and gentlemen. Every pilot program requires planning, legal review, compliance assessment, technology testing, risk evaluation, and operational preparation. That means announcements appearing today may reflect work that began years earlier. Examples continue emerging across the industry. Partnerships involving tokenized assets, digital custody solutions, blockchain settlement systems, fund tokenization initiatives, cross-border payment integrations. Each announcement may appear isolated, but collectively, they point towards a larger trend. Financial infrastructure is evolving. I want you to think about tokenization the way we think about GPS navigation. The roads remain the same. The destination remained the same. Commerce remained the same. What changed was efficiency. People could navigate more effectively. Information became easier to access. Decisions became easier to make. Tokenization may represent a similar evolution. The assets remain. Ownership changes. Transferability changes. Accessibility changes. And those changes can produce enormous economic effects over time. The next phase is lending. Ownership is the first step, ladies and gentlemen. Utility is the next step. Upcoming lending capabilities in XRP Ledger have attracted attention because they may expand what tokenized assets can do. A tokenized gold position could potentially be used as collateral. Investors may access liquidity without selling their assets. New lending models could emerge. New yield-generating strategies could develop. And entirely new financial products could become possible. This is where blockchain begins functioning less like a database and more like a financial operating system. See the importance of trust. One of the biggest challenges in digital ownership is trust. How do you verify that a token that's digitally corresponds to a physical asset? I want to hear your opinions. Drop a comment below what you think. How do you confirm ownership? How do you reduce counterparty risk? How do you maintain transparency? Industry leaders frequently point to blockchain as a tool for trust minimization. not because it removes trust entirely, but because it creates auditable records and transparent ownership structures. As tokenized markets grow, these capabilities may become increasingly important. Another useful historical comparison, ladies and gentlemen, comes from banking. In 1973, financial institutions created SWIFT. Before SWIFT, international banking communications were fragmented and inefficient. SWIFT standardized messaging between banks around the world. Most consumers never think about SWIFT, yet global finance depends on it. Many blockchain advocates believe distributed ledger systems could play a similar role for digital value, not necessarily replacing existing infrastructure, but becoming a critical layer within. So when you go from experimentation to production, many blockchain projects begin as proofs of concept. Very few reach production. The transition requires regulatory approval, security testing, governance frameworks, operational resilience, institutional integration. This process often takes years, which is why infrastructure development can appear slow from the outside. But some observers argue that the industry is beginning to move from experimentation toward implementation. And implementation is what ultimately matters. See XRP as a connective layer. Ripple executive Ashia Burla has described the XRP ledger as infrastructure for moving tokenized value. One notable advantage is the ledger's built-in exchange functionality. This creates an environment where different tokenized assets can potentially interact within the same ecosystem. Stablecoins, tokenized commodities, digital securities, and other financial instruments. But technology alone is not enough. Relationships matter. Connectivity matters. Institutional access matters. Ripple has spent years building those relationships, and those connections may prove important as tokenized expands. See, central banks and governments have interest. Another area receiving significant attention involves central banks. Ripple has discussed engagements with governments and monetary authorities around the world. Central bank digital currency initiatives continue developing globally. Some projects are public, others remain private. Some move quickly, others move slowly. But interest in modernizing financial infrastructure continues growing. The key question is not whether modernization happens, it is how it happens, and which technologies ultimately support it. See, ladies and gentlemen, recent ecosystem developments continue expanding access to payment infrastructures. Partnerships involving payment providers, clearing systems, and settlement networks demonstrate the industry's focus on efficiency. The objective is straightforward: reduce friction, increase speed, improve access, lower costs, create interoperability. These developments may not generate the same excitement as price movements, but they are often far more important from a long-term perspective. Infrastructure creates opportunity, and opportunity attracts adoption. Think of today's tokenization movement like the railroad expansion of the Industrial Revolution. Initially, people focused on individual rail companies, individual routes, individual trains, but the real value came from the network. The infrastructure transformed commerce. The infrastructure transformed transportation. The infrastructure transformed economies. Likewise, today, conversations often focus on individual tokens, yet the larger story may be the financial network being built underneath them. I always tell you short-term noise, long-term structure, ladies and gentlemen. Financial markets often focus on daily developments, price movements, news headlines, quarterly narratives. Infrastructure develops differently. Infrastructure is measured in years, sometimes decades. The internet requires decades to mature. Global banking networks require decades to mature, ladies and gentlemen. Electronic trading systems required decades to mature. Blockchain infrastructure may follow a similar path. Short-term noise, long-term structure. Prices reacting, systems evolving. Those two realities can exist simultaneously. So the tokenization story is larger than gold, larger than XRP, and larger than any single institution. At its core, it is about the digitization of ownership, the possibility that real-world assets can move as efficiently as information, the possibility that settlement becomes faster, markets become more accessible, ownership becomes programmable, and financial infrastructure becomes increasingly interconnected. Whether that transformation takes 5 years, 10 years, or 20 years remains uncertain. but many of the foundations are already being built. Institutions are exploring. Technology is advancing. Infrastructure is expanding. And the race to build the next generation of financial rails is already underway. If you've enjoyed this breakdown, subscribe to the channel. Leave a comment below. Let us know. Do you believe tokenization becomes mainstream before 2040? Or do you think the transition will take much longer? Thank you for watching. And remember, stay informed, stay curious, and keep your eyes on the structure beneath the headlines. Pay attention to what's quiet, I always tell you, ladies and gentlemen. Always. Hope everyone's having a blessed weekend. I want to welcome all the members of the Patreon, the Crypto Public Desk Monthly, all the members of the membership channel. So as we see the continuation of a death by 1,000 tweets, 1,000 headlines, it should become apparent to some of the things that we've been talking about, ladies and gentlemen. If you want to learn how to trade, if you want to learn how to invest, if you feel that this is important to you, do come and join the Crypto Public Desk Monthly. Join over 580 active traders and investors who are learning what I learned for the New York Mercantile Exchange. One good tip from the pits can easily pay for your entire year subscription. Take advantage of the macro research. See, here you hear me set the table and talk about the ideas we're following. Inside the Crypto Public Desk Monthly, you'll see the price points, the entries, how we capitalize, levels. Join the community as it's evolving, because we're going to be capping the limit of people because we can't handle it right now. It's too big. But if you are looking to learn to trade and invest, do come and join. See, as the market is interpreting the headlines, what we believe is going to happen, okay? What I believe in that. This is not financial advice. It's just my own opinion. Anyone entertain this any capacity. Eventually, the narrative will go back to just interest rates talk. The geopolitical situation, the market's going to get used to the kinetic war that's going on. Targets getting hit, neutralized. Talk, this, that, tit for tat. Eventually, it all gets priced in, okay? That's something that you have to pay attention to. That's what we're paying attention to. Because once the market has become used to this, it will focus and key off on other things. That's what we're paying attention to right now. That's what I think is important right now, going forward. See, as financial mercenaries, we use information that we get for free from around the world. And I'm talking about who's going to win in local elections in countries, whether that is a municipal election, a federal election, whatever it is. That edge gives us the first mover advantage to tell us what's going to happen and why, at least for me. That's how I distinguish. But you don't want to get caught up like sushi here by running after things. If you have a plan, follow the plan. That's the most important thing, is following your plan of what you think is most important, right? Do I think that there's ever going to be peace there? Probably not. There'll be lulls, but I don't think that there can be peace between two different ideological views. That's like asking someone who's allergic to something to eat it. I don't see how that's ever going to work in any shape or fashion. One side has to win, one side has to lose. That's the most important thing always. At least that's what I think is important. But I think right now, the bond market reaction to economic data is very, very important, because the largest market moves rarely happen when everyone agrees. They happen when expectations are forced to adjust. See, right now, investors have enormous expectations for inflation, AI growth, earnings, and economic resilience. And the higher those expectations climb, the more valuable real data becomes. Understanding where expectations and reality diverge gives investors and ourselves an edge. And in the coming months, that edge may matter more than ever, ladies and gentlemen. That's what we're paying attention. Gold is a structural consolidation. Everything is keying off of right now higher rates. See, if rates go higher, it crushes asset prices because people want yield. They want return on their money. When rates go lower, you don't get that from holding in something interest bearing. You move into risk. But at some point, a lot of things and divergences are going to go somewhere else. I told you, we are long-term bullish on metals. we're taking advantage of physical right here. I told you, short-term bearish, long-term bullish. These things matter, ladies and gentlemen, because as real yields and Fed credibility are now the primary price engines, this is what I keep telling you. At some point, the dominant driver has to shift back to monetary policy expectations. It is. So people are getting caught up by sushi tracing candles and price action. I think the next major move depends on inflation persistence versus policy tightening. That's what I think. What I'm watching real yields, especially 10-year tips direction. I'm watching central bank monthly accumulation trends, ETF flows, reversal strength, and continuation. Dollar liquidity conditions, oil price shocks feeding inflation expectations, Fed communication versus market pricing divergence. This is why it's important, okay? Because gold is no longer just reacting to fear, ladies and gentlemen. I talk about gold very much. It's reacting to confidence in the monetary system itself. And when that shifts, it doesn't move gradually, reprices in cycles. And those cycles define entire macro regimes, not just asset prices. So 6 months of selling pressure have failed to produce sustainable downside in silver. I'm paying attention to all this. But now with XRP, you got a lot of people talking, and the anointed one, you got them talking about, I don't like this coin. He said this, he said that. Doesn't matter. They got a different bank account name, a different account number. They don't care what you do, don't do. They're doing what you got to do. See, when you follow your own plan, if maybe that's a certain number of coins you want to have, a certain number of stock shares you want to have, certain positions you want to have, certain trading count sizes, it begins to make sense by what you're doing, what you're not doing, as far as I'm concerned. The most important thing is understand what your goals are. What is your short-term, your medium, your long-term goals? You should write these down on a piece of paper and put it in front of your desk. This is your motivation. You want to get a house or a villa somewhere, print that out. You want a yacht. You want a certain kind of vehicle, print it out, put it on your desk. Manifest vision. But ladies and gentlemen, the market right now doesn't know what to make of everything. So I'm in the camp the clarity gets done. I'm positioning myself that the Clarity Act gets passed. I feel it's more important to be in position than not. Because in some time, is it going to matter if you got at this price level or this price level, if there's not much in between? No. What matters is that you're ready for this. So with XRP, every day it gets more convincing and why. Okay? I could go over and over and over again why I said in other videos that XRP is like oil. To me, it's oil. It's a concession of oil. It's going to fuel everything. Oil has derivatives. They're going to find a lot of good uses for XRP. Again, it's coming. But if you don't have a stake in this game, you got no flesh, no skin in the game, what does it matter? You're looking at daily price. What does it matter? The market changed when Walsh was first nominated. Now he's in there. A lot of steam came out when China attacked the U.S. dollar reserve system with the treasury system by making gold and HQLA. What do you think was going to be done? Every time we developed the concession overseas, we used 10-year treasuries to build to get a loan to build infrastructure projects. All we ever did was water and roads and harbors. We didn't do anything else but to develop these in these places that most people can't find without a map. This is the future of the world. So when you got the BRICS and the unit going against the U.S. dollar treasury system, the old world banking, whatever you want to call it, I don't believe in conspiracy theories. You think that they were going to let this happen without a retaliation? Are you smoking and doing bath salt? Think about this. The world isn't a conspiracy theory. But if you're not involved, you got no action, you got no stake. I don't like this coin. I don't like him. Blah, 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 blah. Who cares? It only matters if you're involved. Because every day our money becomes less valuable. A Hershey bar today doesn't cost what a Hershey bar cost 50 years ago. So either you want to be a full-blown hater, be a hater. Hate on me. I love you, haters. I love you. But they're going to get this act done because there's more at stake than most people realize. That's why I say with a remora, we swim underneath, we eat people's stupidity. People become our exit liquidity because they're stupid. FOMO. They got no patience. Investing is like fly fishing. You gotta be patient. Problem is most people, I got ADD, but I'm patient because I got my goals. But XRP is the anointed one. And when the rip your face off rally begins, because when printed to win it begins, and they're not going to telegraph this, what do I got? I'm giving you, I can't believe I give this away for free. If you want to learn how to take advantage of all this, what I'm talking about, come and join the Crypto Public Desk monthly, okay? If you want to learn how to invest, if you feel you need to learn how to invest, if you feel you need to learn how to trade, come and join. 580 active traders invested. It doesn't matter if you're new or you're seasoned. Come and join us. Because listen to me, no one telegraphs anything. I've been saying so many things for free on this channel since I started ranting and people realized I am not an AI person. If you got no action in the game, it doesn't matter. This game is never going to stop. I'm designed for this. This is all I know. I'm a financial mercenary. I take advantage of people's stupidity. This is a 24/7 contact sport. I don't care who won the basketball last night. That's not going to put money in my pocket. I care about what's happening right now in the markets when they open. So think, if you're not happy with your current situation, you got three options. You can continue doing what you're doing now. You can do nothing, or you can say, I need to change. I'm looking for the avenue to change. But ladies and gentlemen, when the rip your face off rally begins, people are only going to wish that they had the ability to get what a price is right now. Nothing risked, nothing gained. You can't win what you don't put in the middle. You can't lose a lot, but you can't win either. And I told you long before, most people can remember with the accuracy of an elephant in a graveyard their biggest losses. They rarely remember their biggest gains. So if you're tired of wondering how people get ahead in investing and in trading, come and join the Crypto Public Desk monthly. Because this time period is going to pass. And then all of these assets are going to be too expensive for the average person to buy. Average people don't own stocks. They can barely pay their bills right now. They're not getting ahead. When Operation Printed to Win It begins and the rip your face off rally begins, there'll be no signal flare. It will slowly start to creep in like the tide of erosion. I love you all. This is not financial advice. This is just my own opinion in case any capacity. Like I say, ladies and gentlemen, one day ICP as well is going to take off because the technology for what it's using is there. I love you all. This is not financial advice, just my own opinion in case any capacity. Have a blessed evening. I'll see you tomorrow at 1:30. I love you all. Be safe. Get excited. Changes in the air in the markets. We're going to remember this. I'll see you tomorrow. I love you all.